everyone, welcome back to Corporate Decoder. Today we're diving into a report that might seem dry, but trust me, it's got some hidden treasures or maybe some hidden traps. We'll see about Columbus Accession Corp's Form 10Q. It's like unpacking a mystery box. You never know what you're going to find, especially for the period ending March 31, 2025. This report gives us a peek into how this blank check company, basically a company looking for a business to buy, is doing. We're going to break down the numbers, see what they're planning, and figure out if they're on the right track. Before we get started, if you're into getting the real story behind corporate filings, make sure to subscribe. Also, join our Discord community. The link is in the description below. First off, Columbus Acquisition Corp is a special kind of company called a blank check company, or a special purpose acquisition company, SPAC for short. They don't actually do anything themselves. Instead, they raise money through an IPO, initial public offering, with the goal of finding and merging with another company. Their incorporation is in Cayman Islands, but their office is in Singapore. This Form 10Q is like a quarterly checkup. It's a report that public companies have to file with the SEC, Securities and Exchange Commission, every 3 months. It tells investors how the company is doing financially. This one is specifically for the first 3 months of 2025. Let's jump into the financials. That's the good stuff. A balance sheet is a snapshot of what the company owns, which are the assets, and what it owes liabilities at what it owes liabilities at a specific point in time. It follows a simple formula: assets contribute liabilities to equity. As of March, the company had about $894,000 in cash, which is good, compared to practically zero at the end of the previous year, December 2024. They also have around $4 million sitting in a trust account. This trust account is important because this cash is raised with the sole intention of acquiring another company. The liabilities, what the company owes, are pretty low, about $46,000. Overall, total assets are $61.3 million, and total liabilities plus shareholders' equity equals that same amount, as they should. This shows a big jump compared to the end of the previous year, all thanks to the IPO. Now let's look at the income statement, or as it is formally called, the statements of operations. This shows how much money the company made or lost over a period of time. For these 3 months, the company spent around $254,000 on general and administrative expenses. This might include things like salaries, rent, and legal fees. However, they made a huge amount of interest, about $404,000, from the cash they have in their trust account. This led to a net income profit of roughly $150,000 for the period. Compare that to the same period last year, where they lost about $7,000. So they're definitely in a better spot now, thanks to the IPO. Next up is the statement of changes in shareholders' equity. This shows how the ownership value of the company changed over time. Starting the year in December 2024, they had a deficit, which is a negative balance of about $52,000. Fast forward to March, and after some activity, like issuing shares through private placement and some net income, they ended up with over $871,000 in shareholders' equity. That's a pretty big jump. The statement of cash flows tracks the movement of cash both in and out of the company. They earned around $150,000 in net income. However, big movements here are the cash deposit into the trust account, which is roughly negative $60 million. But then there are the proceeds from the sale of public units, which is around $60 million, practically cancelling this effect. The net effect is cash increasing $894,000, more or less matching the cash asset mentioned before. This first note goes into the basics about what this company is and what it aims to do. The core goal is to find a target company and complete a business combination, which is like merger or acquisition. The company is aiming to combine with a target that has a fair market value that is at least 80% of the value in the trust account. They have until January 2026 to complete this business combination. If they don't, they have to give the money back to the investors with little returns. It's like a ticking clock. There is a huge caveat where the company says it has substantial doubt about its ability to continue as a going concern within a year. This is a legal wording saying there is a risk they might not survive that long. This section explains the methods used to prepare the report. It mainly mentions what accounting rules that Columbus Acquisition Corp used to prepare their report. The company points out that they are an emerging growth company, which basically gives them some leeway in terms of following all the strict accounting rules that bigger, more established companies have to follow. The document mentions the way redeemable shares that investors can return to the company for cash, are accounted for. As of March, they're sitting at around $60.4 million. This value can fluctuate as the company gets closer to the deadline to complete the business combination. This goes into details about Columbus Acquisition Corp's IPO, initial public offering, which is when they first offered shares to the public. The IPO was in January, where they sold 6 million units at $10 each. The underwriters, the companies helping them sell the shares, had an option to buy more units, but they didn't use it. At the same time as the IPO, the sponsor, which is the group that started Columbus Acquisition Corp, bought additional units in a private placement. This brought in another $2.3 million. These private units have some restrictions. They can't be sold for a while. This part highlights deals or relationships that Columbus Acquisition Corp has with people closely related to the company, like the sponsor or its officers. The sponsor initially bought shares called founder shares at a very low price, only a few cents per share. Then some of these shares were given to independent directors. Columbus Acquisition Corp agrees to pay $10,000 per month to the sponsor for support services. These are potential future events that could impact Columbus Acquisition Corp's finances. The company has agreements to register certain shareholders' shares, meaning Columbus Acquisition Corp has to help these shareholders sell their shares in the future. This note goes into the details of all the different types of shares the company can issue. Columbus Acquisition Corp says it only has one segment, meaning they only run one main type of business. This is a look at any events that happened after the end of the reporting period, March 31, that could affect the company. This section states that as a smaller reporting company, they don't need to include a detailed analysis of market risks. Alright, so putting it all together, Columbus Acquisition Corp is a blank check company that's raised a good chunk of money through its IPO. They now need to find a good company 6, Indra Tinkany 6. On the plus side, they have a big trust account, low debt, and are earning some interest while they look for a target. However, there are some risks. The clock is ticking as they need to find a suitable target. Plus, there's that warning about substantial doubt about their ability to continue as a going concern. My take is that Columbus Acquisition Corp is in a pretty typical spot for a SPAC. The raised money is there and ready, but they now have to compete with all the other SPACs out there and find a business for an attractive price. While they have made some money from interest, keep in mind that finding a business to acquire and completing the deal may cost more than what they earn, making it a race against time. And that's our breakdown of Columbus Acquisition Corp's latest filing. Now, what's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out the Discord, the link is in the description. Thanks for watching and see you next time.